Hello friends, today's topic: markets are up, but these stocks are still available at attractive prices. I am Dr. Bharath and the purpose of the video is service to society. In the current situation, small cap and mid cap stocks are at a much higher valuation than large caps. As per research of analysts, almost half of the large cap stocks underperformed the Nifty 50 index in the last 2 years. Whenever they will rebound, the upside is expected to be good. Many of these stocks are trading below or almost at their 5-year price to book value average, which indicates that they are trading below historical valuation. The following stocks that are underperformed the index and are also valued below their 5-year PB ratio and hence attractive as per analysts. Now, stocks looking attractive as per analysts. Number 1, HDFC Life, upside potential 20%, current PB ratio 10, 5-year PB ratio average 15. 2. Reliance Industries, upside potential 22%, current PB ratio 2.2, 5-year PB ratio average 2.1. 3. HDFC Bank, current upside potential 31%, current PB ratio 2.9, 5-year PB ratio average 4. And then number 4, HUL, upside potential 15%, current PB ratio 11.8, 5-year PB ratio average 12.6. Number 6, SBI Life, upside potential 24%, current PB ratio 9.6, 5-year PB ratio average 10.1. Number 7, Tata Steel, current upside potential 12, current PB ratio 1.1, 5-year PB ratio average 1.5. 8. Hindalco, upside potential 16, current PB ratio 1, 5-year PB ratio average 1.1. Now the ninth and the last one is Adani Ports, upside potential 15, current PB ratio 3.7, 5-year PB ratio average 3.9. Here is an announcement, advanced research opportunity ಕೇವಲ ನಮ್ಮ ಅಡ್ವಾನ್ಸ್ ಕೋರ್ಸ್ ವಿದ್ಯಾರ್ಥಿಗಳಿಗಾಗಿ on our second channel, Dr.Bharath Rohan Chandra channel at 9 p.m. today. Watch it if you want to do some additional research for your own learning and practice. Most of the above stocks have been consolidating in a narrow range for more than 1 year. It is similar to how ITC consolidated for almost 2 to 3 years. Such stocks will suddenly start rallying at a point in time, and at that time the movement may be quite significant and quick. Usually it is said that a stock rallies after a consolidation when people don't expect much from it, since many people would have been waiting for a long time for it to be appreciated and would have given up hopes. 80% of the returns of a stock is earned 20% of the time, and 20% of the returns are expected and earned in 80% of the time. For example, a stock may appreciate by 12% in just 2 to 3 months, and it may appreciate by another 3% in the remaining months of the year. In total, it would have given 15% in that year, but not uniformly like bank interest. Stock market returns are more in certain periods and hardly anything during other times. Successful investors understand this very well and hence develop patience to hold for long term. However, this will apply only to fundamentally strong companies, since weak companies may not do well even if held for long periods due to their deteriorating business. At the end of the video, here is a question. The highest number of rich promoters come from which sector in India? There are 4 choices: IT, automobile, pharma, metals and mining. Do your own work and type the correct answers in the chat box. If you are not the member of Dr. Bharath Rohan Chandra channel, this is the time to subscribe. Press the bell icon. Send the video to all your friends. The video is good. Press the like button. Thank you for watching. Bye bye. All the best.